Thank you for joining the Gold Silver Bitcoin Show, brought to you by the GoldSilverBitcoin.com store. We are more than honored to be sitting down today with Mark Thornton, the Peterson Luddy Chair in Austrian Economics and a senior fellow at the Mises Institute. Thank you so much for joining us today, Mark.
Justin, it's great to be on your program. I look forward to talking to you.
You've written quite a bit of work that's featured over at Mises, including numerous topics, oftentimes around history or Austrian economics. And I wanted to maybe start today with some of your work regarding crises, and particularly in a work, the skyscraper curse, and how Austrian economics predicted every major crisis of the last century. So could you maybe, for our listeners who are not familiar with Austrian economics, explain what Austrian economics is and how it was able to predict every major crisis of the last century?
Yeah, well, the Austrian school's been around a long time. It's really one of the oldest schools of economics, except Marxism. And right now, it's smallest. It's one of the smallest schools of economics, in that mainstream economics is huge. And of course, Marxists are a large group that's increasingly powerful. But we're also the fastest growing and most popular form of economics. And at the Mises Institute, we have the world's largest collection of Austrian economics and the works of Austrian economists like Ludwig von Mises, F.A. Hayek, all of Murray Rothbard's stuff. And we really cover the school and put out articles on a daily basis that people can use and people can benefit and educate themselves about the economy. But we're an offshoot of the old classical school, where things are based on logic and deduction and what most people refer to as common sense. And that's what I think really drives our popularity with audiences around the world now. There's 20 copycat Mises Institutes around the world, and so I encourage all your audience to come to mises.org and take a look. We're probably the most extreme free market organization that's out there, but we really try to educate the world with the scientific aspects of economics, and we're responsible for all those things that everybody associates with economics, like the laws of supply and demand and opportunity cost and comparative advantage. But we also have a theory of the business cycle, which dates back over 100 years to Ludwig von Mises, the Nobel Prize winning work of F.A. Hayek, the historical work of Murray Rothbard, and his really great book, America's Great Depression. If you want to understand America's Great Depression and get rid of all of the untruths that most Americans know about the Great Depression, that's the one book that I very highly recommend. And it's the book that really got me going in the study of business cycles, in the study of Austrian economics. And so this latest book that I came out with on the skyscraper curse is really two small books. One is on trying to make sense of the skyscraper curse, and the other is the history of how well Austrians have been able to predict economic crises like the Great Depression, the stagflation of the 1970s, the dot-com bust. And so having a feel for, are we in a boom that's unsustainable, or a bust is coming in the economy that is going to radically change the matrix of asset prices, is really very important really for everybody, but people who are moving around in asset markets. It's really your only real guide uh, to those changes in the relative values of assets. And so the skyscraper curse looks at skyscrapers, and it's based on some real estate research from the 1990s that I came across. Uh, and I realized that the Austrian theory of the business cycle was really motivating this understanding, and that it was basically anytime somebody built a world record setting skyscraper, which seems like a great thing, but it marked an eminent change in the business cycle and of a severe bust that was coming in the economy. So the latest real true signal was the Burj Khalifa Tower in Dubai in the Middle East, setting a record in late 2007. The economy was going great. Unemployment rates across the world were very low. There was no pig crisis in government bonds in Europe. And the skyscraper curse said, watch out, things are really going to go in the toilet. And they did. Dubai went bankrupt. Europe slipped into a recession and really a depression. The United States went into the financial crisis in 2008. And so it was very much a good guiding light about that dramatic turn in the business cycle. And CNN interviewed me, and they said, this is a great thing, but this guy Thornton down in Auburn, Alabama, is saying no, it's going to cause a crisis. And of course, the building of the skyscraper doesn't cause a crisis, but it embodies the types of things that Austrian economists see in a Fed-driven, low interest rate-driven business cycle, which you have low interest rates, you have exuberance in the economy, and you have all sorts of new technology coming in. And when you build a world record-setting skyscraper, those people have to bring in all sorts of new technology regarding construction, regarding elevators, regarding the glass that they put on the skyscrapers. And so all of these new technologies have to be forced into the economy to make those higher heights possible. And that's what's going on in the economy as well, whether it's Amazon or computer chips or trucking supply chains. Everybody is bringing in new technology in that is too soon. It's future technology that is brought in to do all of these brand new things, which are ultimately going to be unsustainable. And so, in the crash that follows, Amazon, shares shrink, and computer chip companies can go bankrupt, but their stock prices are definitely going to go down. It has implications for gold and silver and commodity prices. And so I try to do it as simple as possible and as common sense as possible in the first half of the book. And then I go in the second half of the book and look at all of the crises that we've experienced for over 100 years and show how Austrians, with their theory, have been able to see these boom bust patterns, and then compared them with what mainstream economists thought of these booms, which was always too optimistic, wrong-headed. They didn't understand that instead of just a building economy and a flourishing market, what they were actually looking at is an artificially Fed-induced boom in the economy, which would, of course, eventually come unraveled in a very negative way.
When I look at the Burj Khalifa, construction was started in 2004 and it finished in October 2009. Of course, we have the global financial crisis, which begins in October 2008 or September 2008 in earnest across headlines, with $1 trillion bailout in the form of TARP going to the big banks at that time. Now, there's actually been an update in the 10 years since, and it actually continues this trend. So, and I suppose it bolsters your theory. So, in 2020, the Jeddah Tower opened, which is currently now the world's largest building, the world's tallest building. And that coincided, of course, with what I would argue is probably looking increasingly like a depression, which I believe the harbinger for which would have been the lockdowns and the subsequent supply chain issues that arose therefrom, as opposed to the official story, if you will, that there was a virus in the pandemic that hurt the economy. It was rather, I think, the actions that were taken which have harmed the economy. So this theory today is still holding up.
Yeah, it is. And, in Dubai, they set the record back in very late December 2007, early 2008. That's when it reached the record height. And so it lines up rather well with events. And then in 2019, with the new record very much looming out there, and looking at the actual statistics in the marketplace, things like advertisements for new jobs was at a record all-time high in December of 2019. And a lot of the statistics at that time were incredibly rosy. And so we were, very much projecting this depression to start in 2020. And all of those statistics of late 2019 that looked incredible were already falling apart and were in a steep declines before the virus was ever really recognized. And so the virus helped cover up this crisis, and it induced, of course, a tremendous series of bailouts, which we're still experiencing today, where the Fed injects enormous amounts of liquidity, interest rates near zero, real rates are negative and have been. Nominal rates are negative in parts of Europe. So it's a worldwide crisis. And I think the virus and the lockdowns help cover that up. And of course, the bailouts by central banks continued or accelerated. And then in the United States, the large unsustainable deficits by our government very much increased and are planned to increase even further. So whenever the Fed is injecting lots of money into the economy, and when governments are injecting lots of extra spending into the economy, you can't really see an economic crisis in things like gross domestic product, which is just an accounting mechanical function that misses many aspects, particularly during crises or wars, about the standard of living. The GDP is only an inexact measure of happiness and economic health. And when the Fed and the Treasury, and not just in the United States, but around the world, are going crazy, you can't really rely on them. And so the real world economy out there is in crisis. It's where a huge poor population in the United States has been dislocated from jobs and their living situation, where their standard of living is now dependent upon things like their savings. They're eating into their savings, governments, subsidies, and stimulus checks, and where companies are facing dramatic problems. Not so much, the big companies still have easy access to funding, but small business has been absolutely torpedoed in all this, and the the sort of future of the economy and jobs is dependent upon small business. So I would say that despite the fact that we've seen all of these bailouts, that the economy is in an unrecognized crisis, because stock markets are still high, because interest rates are still low, unemployment looks okay. And so the typical things that the media looks at, which work during normal times, are not working right now. And, the uneasiness about the economy out there is clear to the average person. They know that there's a reason to be concerned, but they don't know why. And I think that's where Austrian Economics has been very helpful for people to understand those reasons.
So in 2008, I believe we reached a new paradigm, at least publicly, of quantitative easing. And we've seen that trend continue today. It was only 12 years later when $6 trillion was printed and injected into the market, which is a big reason why the stock market is at all-time highs.
Yes.
It's also a reason why the cost of food is increasing in our neighborhoods now in very real ways. I believe we're in the midst of moving from a selection-based economy towards an availability-based economy. I've gone to the store multiple times for the first time in my life and not had items. And I'm not talking about toilet paper, which everyone seemed to have experienced last year. I'm talking meats, staples. And so you mentioned that people are starting to recognize that there is a crisis, there is an economic crisis, and they're starting to feel it. And Austrian economics can provide the why. Can you maybe go a little bit into detail about the why?
Well, there's so much there. And believe me, some of my friends just go shopping and they don't even see the shortages. They don't see the fact that the shelves are, bare or just barely full. They bring the inventory to the edge. A few weeks ago, I went into Kroger's and their entire section of ramen noodles was gone. And the students weren't even in Auburn at the time. And this is a section that is about, 10 to 12 feet wide and, from floor to halfway up the ceiling. And it was completely gone. And, so there's general shortages of a lot of things in the economy. And it's not just due to supply chain interruptions and higher prices. My sugar-free Reese's cups just went up 15% from one day to the next. And so those things are, those problems are filtering into the economy. And the problems with just money printing, and at the base, the long run problem with money printing is that it eats away at the productive forces in the economy. It eats away at capital and capital accumulation. And I'm not talking about stock market prices. I'm talking about the actual stuff that entrepreneurs are willing to invest in, whether it's inventory or whether it's machinery or whether it's commercial space or whatever it happens to be. Free money for some people and higher taxes on the productive class means that the productive class, the entrepreneurs and investors, are just not going to be interested in production capacity. And you won't find very many CEOs who, they'll tell you, oh, we're investing in this and we're investing in that. But overall, they've actually been cutting back in things like oil, despite the higher prices, the oil industry has been underinvesting. Pharmaceuticals, that industry has been underinvesting and farming out production to other people. Even computer chips and like Intel, which is a great, huge company, very successful, have brought online so many things that we depend on now, but they haven't been able to really do the investment to keep them on that cutting edge. They've lost that, and they become more of a production facility for other people's chips. So, you want to stay on the cutting edge, and inflation dulls your ability to do that. And so this is very, very hidden and surreptitious. This negative long run effect of inflation on production and on capital owners and on entrepreneurs. And that's a huge long run problem. And, and so we see a weakening in the economy. There's certainly still a lot of bright spots out there, but ultimately this is going to cause a reshuffling in asset prices.
You say reshuffle, and the word reset comes to mind, which has been thrown around a lot in the forms of the Great Reset, which is an interesting concept that's been kind of floated out there by large international organizations such as the World Economic Forum. You mentioned that there's some bright spots, and I think that's kind of important to hone in on because there's so much negative news. The mainstream media just is pretty much designed to like depress people, make them feel helpless so that they just basically listen to authority, it seems. And there's just so much negative information coming out of that. And social media. I think the social media algorithms, it seems like there must be quarterly updates or something, because it seems like the content is getting shorter and dumber and more backwards all the time. And I don't think that's a reflection of the people using these apps. I think it's probably more a reflection of what's being served to the viewers and to the audience. And so there's a lot of negative energy coming out of social media. For those of us who are digital natives, it takes a lot of time to prune our social media if we choose to be on social media, whether as entrepreneurs. When you're an entrepreneur, you're on social media a lot, even if it's just a post. It's easy to get sucked into these platforms. I mean, Facebook's like just bombards you with information, which I also think from a design perspective makes no sense. So perhaps there's another reason why I feel so overwhelmed when I log on to Facebook. But I think that you have to prune your social media content in order to make it positive and make it something that contributes to your life rather than is an energy drain. And if you don't prune it, it automatically becomes an energy drain. So I'm curious, you mentioned that there's a lot of positives. Could you underscore or highlight some of those positives that you're seeing?
Well, yeah, I see them all the time as well. I don't make a list of them to write about like I do the negatives, because that's what I'm supposed to do. But I agree wholeheartedly with, pruning and staying off of social media. And I feel this in a very heavy way because my Facebook feed, my Twitter feed, and so forth are because I'm a public person, those are more professional things. And so I get stuff from 10,000 different people when in reality, I should only have 100 friends on Facebook. I've got, 5,000 friends on Facebook. And so that's a problem. That's my problem. But, I would, if you're going to use social media, it should be a targeted thing, and you shouldn't need to do it all the time or every day. Things like listening to intelligent podcasts or informative podcasts or information laden podcasts are a great way or substitute away from social media into something that's more helpful. And there's plenty of content there. And I think particularly in the libertarian, hard money, good economics, there's a lot more content out there. I think Mises now has 4 or 5 different podcasts, and we look at things like the history of economic thought, or what are the keys to entrepreneurial success, or how do we have a special podcast on medical issues. So how does your average American circumvent the government, insurance company, medical complex? How do doctors do it? How do medical firms do it? And so there's a lot of great content out there. And, and also I get the opportunity to see a lot of bright young people who are very actively trying to inform people and are trying to change the narrative in a positive direction. Your podcast is a great example of that. But right now, entrepreneurs are really, and I haven't met a single entrepreneur who isn't having to deal with all of these new problems caused by government, and they're succeeding most of the time. Unfortunately, and this makes me cry, is that some of them have been put into a position where they go out of business. They can't keep their labor force intact. They can't get product, or they're in government zones which are filled with crime and social disruption in urban areas. And so that's a problem. I think one of the completely unnoticed things is that entrepreneurs in restaurants and cafes and coffee houses have simply put some chairs and tables outside. And, that's, I've realized that it's such a great thing just to be outside, talking with your friends, drinking coffee, or having lunch. It's a wonderful thing. And it's something that didn't exist in Auburn to any great extent. There was no, or very little, outdoor seating. And now any restaurant, any cafe, any coffee house, bar that can move outside, despite the fact that, the COVID restrictions and the probability of catching COVID is fallen rather dramatically in our area. Those outdoor areas are still incredibly popular. So it's the little things that entrepreneurs can still do to try to follow the tastes and preferences of consumers, and they're doing yeoman's work in terms of trying to continue to get product to market. But right now, entrepreneurs are faced with these exterior exogenous problems that they're having to deal with, and fortunately they're succeeding enough to keep us all going.
Something I think that seems positive these days is cryptocurrency. I think that there's a healthy debate that needs to be had about the viability of cryptocurrency generally blockchain. I think there needs to be a discussion about the health of the World Wide Web, and as the backbone of cryptocurrency and Bitcoin and blockchain for so many people, if the internet as we know it today is sustainable for the long term, or if we can improve upon it, namely by decentralizing it. But Peter Thiel, the billionaire, recently stated that and this is a positive trend, that essentially a one world state project is coming to an end, and cryptocurrency will play a large role in it. And then there's also this gentleman named Gary Vaynerchuk comes to mind. I'm not sure if you're familiar with Gary Vaynerchuk. He is certainly no economic theorist, but he is a business theorist and activist. And he has been filming himself for many years now, conducting business. And he has been showing people, particularly young people, I think, first of all, to believe in themselves, and second of all, to become entrepreneurs. And then he gives you the tools about how to become an entrepreneur. So everything's filmed. So when he's doing consulting practices, speaking with small businesses, and they're asking questions about how to grow from 80 people to 200 people, or 10 people to 20 people, or how they can grow, or how they can perhaps maintain healthy work culture. This is all on video for any entrepreneur to watch and learn from. For instance, he has a show called Trash Talk, and it's just him, actually in New Jersey, generally speaking, going around to garage sales, buying and selling stuff. And he's not doing this for to make money on the side, because he's leaving a day of trash talk of garage sailing with perhaps like, $200 in profit or $100 in profit. But he's showing you how you can buy at a garage sale, sell on eBay, and not get that job at Target, and be happier and be more empowered, and learning how to buy and sell. And I know that this gentleman's got 10 million followers on Instagram, millions of followers across all the social media, and he's teaching people, whether or not he admits to it or not, or whether or not his audience admits to it or not, how to be a capitalist, how to be somebody who thrives in markets. He loves the market. He loves getting punched in the face by the market too. So entrepreneurship, you mentioned, what does Austrian economics teach entrepreneurs? What can entrepreneurs learn from Austrian economics?
Well, I'd like to start with a point you raised about these garage sales, because that underpins the very definition of what entrepreneurship is. It's people who buy and pay for capital, wages, facilities. You pay all of that up front without ever knowing exactly what you're going to be able to sell it for. So that's the very definition of uncertainty in the economy. And workers don't want to get paid when things are sold. They want to get paid when they work. And so a lot of people don't want the uncertainty. Entrepreneurs, they seek the uncertainty and ways to profit off of that. And so that's the whole key, is you're buying at certain prices now, but you're only going to be able to sell at uncertain prices in the future. And the more entrepreneurs we have, the more entrepreneurship we have. That's a very good sign. And by the way, one of the good signs is that people are looking at the labor force participation rate. How many of us are working or looking for work? And we're looking at other metrics in the labor market about why people aren't working or why people don't have jobs and so on and so forth. But side by side is the good story that there are now a lot more people who are not working for other people, but are working for themselves. And very often these small ventures, one-person ventures, or maybe one person and a few workers helping out in a catering business or something like that. And so people are leaving the workforce and starting their own firms, their own operations, large and small, and that's a great thing. And what their experience is, as you point out, is that there's a lot of difficulties. There's a lot of real world experience that you need, but there's one of the great things is there's always profit opportunities. And and so the fact that younger people are becoming entrepreneurs, the fact that despite the trend in young adults adopting socialism, there's also a huge bunch that are coming to us in Austrian economics to learn about the way the world actually works and how we can actually be prosperous. And so the mainstream media reports about unemployment and about the rise of socialism are definitely true, but underneath that is the really good signs about how young people are embracing entrepreneurship, and they're embracing Austrian free market radical economics, and they're doing great things, and that a lot of it goes unnoticed and certainly not reported. And so, that's the problem again with the mainstream media and even social media, is you're really not getting a clear picture, and you have to uh, define what you're interested in and then refine your approach to getting that kind of information. And then Bitcoin, I still get for the Mises Institute, I was sort of the point man on Bitcoin and cryptocurrencies and blockchain technology almost 10 years ago. And, Bitcoin emerged in the wake of the financial crisis, and the bailouts of the banks, and all sorts of things that the government was doing to help the wealthy to the detriment of working class people. And also the whole structure of Bitcoin, the fact that people have to work and invest and use real resources to produce Bitcoin, is a reflection of the gold standard, where it's hard to get gold. Well, it's hard to get Bitcoin. And there's a declining amount of gold out there to get. There's a declining amount of Bitcoin and most other cryptocurrencies. And so that causes, or eventually will cause, a deflationary effect, but it's not a problematic deflationary effect. It's the same sort of deflationary effect that existed under the gold standard. So whoever invented this clearly had in their mind, I need to invent something to run counter to a boom bust economy by the Federal Reserve and huge bailouts of the wealthy. And this is what they came up with, is Bitcoin. The blockchain technology is not going anywhere. It's going to be refined. It's going to be, people are going to be applying it to all sorts of things. And a lot of those things are things that government has traditionally done for us. So it's going to supplant the word necessary, in the fact that government is necessary to do X, Y, and Z. With the blockchain technology, that word necessary goes away, because the blockchain technology can now do a much better job, a much more efficient and lower cost job at, for example, property deeds, and contracts, things of that nature. So it's a revolution in thinking and application of a lot of the things we do, whether it's money or contracts or exchanges. Bitcoin is the leader. Blockchain is going to be a foundational technology, and cryptocurrencies are not going away. And the fact that we have lots of them is a great thing, because they're like in the prehistory of humanity, where we used lots of different monies. Again, this is a way in which the inventor of Bitcoin is bringing us back to that early experimentation in money. The quality of cryptocurrency is going to improve. It means the whole deflationary bogey, that people worry about deflation. At least, mainstream talking head people worry about deflation. I love deflation. Every time I go into a store and the price goes down, I'm happy as can be. When I see people at Walmart and Sam's and Target, when they see lower prices, or they can't believe that 60-inch flat screen TV is now 40% less, and nobody, it was so commonplace that they didn't have a sale, they didn't have an advertisement. It's just that's the price now. So we love deflation. It's the state and the Fed and the Treasury that hates deflation. Their whole game is printing money and inflating and borrowing and doing all these nasty things to the economy. It's going to be a battle between cryptocurrencies and the state. This is not going to go easy. This is not some linear transformation. The state knows it can't do away with cryptocurrencies, but they also know, like China and other countries, that they don't like this whole idea of having to compete with some other medium of exchange. So it's not going to be easy or linear, as some people expect from the basic story that I've been telling for a long time. But I think it's a great development. It's a huge positive sign. It's almost miraculous that this has come to pass in our lifetimes.
There's so much to dive in there. And I think everyone always says in the cryptocurrency space, and when I mean everyone, I think like a huge percentage, like 90% are saying, oh, well, government can never ban Bitcoin. They can't ban cryptocurrency, almost mocking the state. However, the state won't just try to go after the network itself. They might go after the businesses, and a particularly lethal or venomous state might go after the individuals themselves eventually. And so when you bring up this word battle, or you say that the small businesses have been torpedoed, I do think that we are witnessing in some ways economic warfare against the people. And when you have the global financial crisis of 2008, which resulted in $1 trillion bailouts to namely big banks, which then went to buying up assets on the cheap in the midst of crisis. And as those assets increase, a lot of people, defenders of the bailout, will say, well, then the banks paid back that money. However, when you get the money first, you're at an advantage. I forget the name of this theory, but you're at a distinct advantage getting that money first in the midst of crisis. All these big corporations, banks were able to buy up assets on the cheap and then ride the wave back up. Of course, we had a pretty frothy economy up until about, as you stated, December 2019. The labor statistics were very positive. And then they give us back, they give the taxpayer back kind of devalued currency at a later date. Then you have in almost what is evidence of kind of a theory of physics, I guess, is that for every action, there is an equal or opposite reaction. So you get the global financial crisis, then you get Bitcoin. And I think something that's very notable and misunderstood about Bitcoin are how clearly it is based off of sound economics. So there will only ever be 21 million Bitcoins in existence that are released in at least assuming increased interest in Bitcoin, deflationary manner. And then in the Genesis block itself, it states chancellor on brink of second bailout. It's a direct reference to the bailout economy, to money printing, to quantitative easing, to central bank driven monetary policy. And a lot of people, I don't think, are aware, first and foremost, that Bitcoin has a cap. They went into Dogecoin earlier this year thinking that they were all going to get rich because Elon Musk was talking about it. And now I'm learning that a lot of some peers that I've known from youth are kind of come to me and they're like, so when's Dogecoin going to get back up? And I had explained to them the different monetary policies, namely that Bitcoin has a cap and that Dogecoin doesn't have a cap, and they're totally flabbergasted by that. So could you maybe speak a little bit as the point man in the early days of Bitcoin at Mises about the parallels between Austrian economics and Bitcoin?
Yeah, I mean, and this was a surprise to me. I had a lot of friends who were very interested in Bitcoin from really the very beginning. We had local Bitcoin meetup groups and stuff like that. But I looked at it, in more of a technical, institutional way, which wasn't really out there at all back then, about the limitations on the total amount of Bitcoin, which Austrians would generally endorse, because we don't even really want to be wasting resources digging up gold and silver to do that, to do sound money if it was possible. Bitcoin makes that possible. Bitcoin requires creators or miners. They called them miners. They still do. It requires huge amounts of computing capacity, huge amounts of electricity, some labor, some facilities, and so on and so forth. And so it requires real resources. A central bank can't just wish a ton of new money into existence. And then, the whole transactional feature, which is not too much used right now, but it's going to be increasingly used, because Bitcoin is moving out of the young adult category. It's moved into Wall Street. It's moved into my dentist and soccer moms and things like that. And at the Mises Institute, we've been taking payments and donations in Bitcoin for years. I would say probably 8 or 9 years, something like that. But that's been rather unique until recently. And you can now, use those things if you wanted to in terms of transactions. Now, the fact that Bitcoin has been in an uptrend means that people have been very reluctant to use their Bitcoins and their inventory of other coins to make, retail transactions, but it's increasingly possible. And so there is a big bandwagon effect, and the fact that we have all these other cryptocurrencies searching for new improvements, like Dogecoin, that on its surface didn't seem to offer improvements. It actually seemed to offer negative setbacks compared to Bitcoin. But if Bitcoin was on its own right now, if it was the only cryptocurrency, probably expect it to be over $100,000 a coin right now. But the fact that we have more alternatives or substitutes means that that's going to have a stabilizing effect on cryptocurrency values. Now, that's not going to necessarily help Bitcoin only investors, but the investor class in cryptocurrency now is much more diversified than it was 10 years ago, obviously. And there are good competitors for it. So, competition, entrepreneurship, technology, all of these forces are permeating the crypto coin market. And so, the mainstream media looks at it, oh, Bitcoin is down 6,000 or Bitcoin is up 5,000. It's highly unstable. And it has been unstable around a positive trend. But, every early market is basically the same way. You see big swings in cost, big swings in price, big swings in the companies coming in or the companies failing. And so this is a typical early market scenario. And that applies to computer chips or automobiles or whatever. Those are things that are just inherent in any marketplace, and they're they're working themselves out in the crypto space. And as I said earlier, and as you emphasized, there's still a battle going on. And basically the other side, the government, the state, the central bankers, are just hoping that it's going to work its way towards, Wall Street. And so as more and more of it takes place on Wall Street, fine and dandy for us as users and consumers. It makes it a lot easier and safer in some respects, but it also generates tax revenues for the Treasury, and so I can't say, obviously China has been shaking up this market, but it's completely unclear to me when and what the next move is going to be on the part of the state, and that's it's a big long-term risk of this marketplace. But even with automobiles, there were people who were suggesting that because of accidents with the early automobiles 100 years ago, that they be banned from the city, for example, or Nashville saying, this is too dangerous to have women driving around within the city limits. And so it's not, unique historically, but it's something I think a lot of big time crypto investors realize that that's a distinct possibility.
I know we're coming up on the hour here, but I did want to ask you about the role of gold and silver today. What are your views on gold and silver?
I'm completely and totally optimistic. We've been, in a lull, a short-term lull in the marketplace, but, we're talking about gold and silver just a few years ago, with gold being around $1,000 an ounce, and silver being, I don't know, $13 an ounce or something like that. So we're almost doubled the price from the pre-lull area. Then we've jumped up to, the high 1800s type in gold and $25 in silver. And then we've had this lull for the last several months. And I think, that is going to be replaced by a reestablishing of the uptrend. It may come rather fast and furious. And I've been waiting for that to happen, and it's frustrating. Austrian economists, we have an idea of what the future is based on what the policies are, but we have absolutely no tools to tell us when and how much, things are going to happen. So I'm just as completely in the dark about where gold is going or where silver is going or when it's going to take off as anybody else. But I'm very optimistic. I've been a precious metal enthusiast, and since I was a little boy, they went off the gold standard. They stopped minting silver and coins, and I had just had an instinctual reaction, even as a child, that somehow it was wrong to take away something that had value and replace it with like monopoly money, something that nobody cared about. It was just a game, and how could you run the real world with just a game? And so I've always thought that it's like an insurance policy, and that at certain times you can make money off of it, like in an investment. But I guess I treat it as both an inflation hedge on the one hand, so that it's one of my forever investments, but also if you can get lucky, there are certain times where you can actually make money, like an investment in a stock that you buy and you sell 3 years later and you make a bunch of money. And I think that given everything that's going on in the economy, given policy of inflation, and I think, the Fed's idea about reducing the amount of quantitative easing that they're doing and buying government assets and mortgages, they said they're going to taper off those policies. Well, we'll see. I mean, they don't tell us the truth on a regular basis. They've been buying and selling assets under the table. The people in charge of monetary policy have been doing that. They just released a policy yesterday saying you can't, Fed officials can no longer invest in individual securities. But in general, I think the environment is incredibly good right now for gold and silver, precious metal investments, or even commodity investments have all been, have all moved up. At first it was gold and silver, and, we also copper, also natural gas, oil. We've heard, lumber, we're the stirrings, no pun intended, in the coffee market and in the sugar market. So commodities, unbeknownst to most people and unbeknownst certainly to the mainstream media, commodity prices have been doing very well. And I think there's another leg up dramatically coming in precious metals.
We've had the distinct pleasure and honor of sitting down today with Mark Thornton, the Peterson Luddy Chair in Austrian Economics and a senior fellow at the Mises Institute. Thank you so much for joining us today, Mark.
Hey, Justin, it's been great. I look forward to coming back on your show.
You're more than welcome to anytime. And thank you, everyone, for listening.